Hey everybody, Brian here from quantlabsnet.com. In this video, I'm building off of my two prior videos here on my channel. These include this one. Let me just put it this way. So this one's entitled Expose How the Algorithms Steal Billions from Retail Traders. And then this one is These are the HFT strategies that make hedge funds billions. So just as the example rolls out, um, let me just readjust here. So what I'm going to show you are two things. The first is the dashboard for silver, using all the secret sauce stuff of the high frequency traders, what they use, the $1 billion funds. So let me show you that. So uh, here's the strategies we're dealing with. All of these right here. Okay. So we've got the data loaded in. One big thing I need people to pick up on is I've said this before, these are all the available uh, instruments that I'm able to download with November, December contracts. Also, you can see by the volume, some of it's like, is it worth trading? And then there's the big ones like MG, which is micro gold, silver, uh, all the big ones that you know about. One thing I couldn't figure out is why is it glossing over the crypto, Ethereum, and Bitcoin. I just learned that Rhythmic sometimes will allow. Sure, it depends on, I believe, on the broker and the API access you get through that broker. So if I'm with EdgeClear, they may limit you on the crypto. So I may be caught up in that with Rhythmic. I know certain brokers may allow crypto via Rhythmic. So when you sign up to a broker, just make sure that they allow crypto um, through their Rhythmic connection. Okay, I can't confirm that yet, but that's kind of what I'm suspecting. Anyways, these are all the different for silver. I'm going to show you the dashboard. This is the last one I'm going to show you. These are all the different strategies that are available. So I got this running live. I'm going to also show you one of the criticisms I got was because of I didn't show the real data with um, with S&P 500, the ES. So let me just load in all these guys and see what happens here. So these are all the different strategies that a lot of the firms use. As I said before, you can take them and then install them and put it into a prompt, and then you can actually get code from it. So a lot of people don't seem to realize that. So let me just load in the data here. So all of these dashboards, if you're new to all this, is basically generated by AI. Um, as I said, I don't see what's the point of killing yourself hand coding stuff. Depending upon if you're willing to spend the money on AI, this stuff will work. And you can generate some great stuff like what you're seeing here. Been showing that in a lot of the videos here. So what we're looking at now are the different available strategies. Lots of bugs here as usual. Um, and let's see the portfolio metrics. So what I want to show you here, this is the whole point of doing this exercise, is to know exactly what strategy to go with out of all these. So you can clearly see there's only a few here. There's a combined strategy. There's this one called the VAT gamma, and then this big one called the warrant morph. Everything else is negative. You can see here on the volatility, Sharpe ratio, and so on. So if I look at the uh, morph, this is definitely hallucinating. Um, the volatility may be correct. I can't say, but it just gives you a general idea on what strategy to go with, even if it does hallucinate here and there. But yeah, that looks like a good one. Maybe the VAT gamma as well. Um, this is using back-tested historical data, depending upon how far it goes back in the time frame. So generally, we have here what's it called, VAT gamma. So right here, again, wild return. Um, so, you can use this stuff as a measurement. You can also take a look at the risk metrics as well, correlation of it, and with that bug, which I thought was fixed. But anyways, I'm going to leave it at that for this. So generally what I'm looking for is which is the better strategy to go with. That's all that whole purpose for. I'll make that code available. If you know how to use the AI, you can probably correct that if you really wanted to. But generally, that is that. So now what I'm showing you is the data, and I believe this is minute data. So this is starting beginning October till the end of 29th of October. So you see here we have all these. This is now for the ES. I believe, yeah, ES Mini. Um, so we have here all the different strategies. Again, all these crazy returns, blah 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 blah. But generally, what I'm after is which one gives you the potential highest return. So here's the different equity curves of different periods. You can see here the risk return. We have an implied order. We also have here a couple other ones that have a higher return. Order flow toxicity, I've talked about that, and another strategy in behind there. One last thing I should mention regarding the silver, which a lot of people probably ask about, is the details of those strategies I just went through. So let me just find the two ones. Let's see if we could find the descriptions. Oh, let's see here. I think I saw it. Yeah. Anyways, I'm not going to worry about that, about those particular strategies. Anyways, going back to the ES. So here, it goes right into the HFT related kind of stuff because I believe there's enough data in here to suss that out. So you see here, these are all the different strategies that are available. Latency arbitrage, implied order flow. These are high frequency trading strategies identified by that AI. Vanilla, charm, exploit, and so on. So these are the higher returning. Um, so you can see here, our best one's the implied order for risk adjusted, and the best order gamma scalping 0 DTE. So, yeah, okay. So here's all the details in some of these. So our best one was the implied order flow. So let's see what that one entails. So it's basically front running delta hedging from options activity. So essentially, that's probably the questionable one legally to run. That's probably how a lot of these firms will take that order flow at the blink of an eye from Robinhood and the like, um, and any of the options, especially in individual stocks, probably. And that's how they're doing that. I've talked about the 0 days to expiry. And what the AI told me is that the SEC, the CFTC are addressing a lot of these types of with new regulation coming, where they'll get rid of the 0 DTE uh, techniques. So be aware of that. Part of the new regulation as well that I read, I'm just putting this in a brand new video, is that they're now going to be able to put in orders and steal and repossess any servers doing these type illegal, questionable kind of activity. So the regulators are going to get very hard on this in the next regulation whenever that comes in and becomes legal. I'm sure there's going to be some pushback by the lobbyists of these firms. So the other one is the gamma scalping. Um, yeah, so this monetizes rapid gamma changes in 0 day options. So these are your predictable strategies that do well, and that's how a lot of these firms do. Okay, so let's just go through some of this stuff. It has some interesting features in here. So you can see here we're doing the microstructure analysis. There's that toxicity I've mentioned before. Um, and some of these numbers, I'm not sure if they can be 100% relied on. But again, I'm just after the typical strategies that perform. That's all I'm in it for. Okay. Making that clear. Okay. So these are all the strategies at a very high level that are available, again, using real data. Um, we have here this shadow market analysis. Um, let's see what that delivers. Um, okay, so we talked about all the different strategies. And again, I must stress in this video here, it's very important. What I'm showing you is very simplified. Okay, these are complex strategies, and what's generated are simplified strategies of those real complicated implementations. So you have to consider all of these are going to run on nanosecond execution. You typically are assuming that you are co-located within the exchange. You have full market depth at your disposal in the data feeds that I've talked about when it comes to the 200 levels that I've seen. Class asset data feeds, those are the proprietary data feeds that come in from third parties like the CME itself. And then these are going to be custom built using FPGA as well. So there is that. Let's see. I think that's it. Let me try to execute this. See how fast this takes. It takes too long. So we're now running a shadow market dynamic analysis. This is all the unknown secretive stuff the HFT jobs will use, some of the metrics that, and again, this comes from a Chinese AI that nobody knows about. They seem to, it's one of the only AI that I've seen that can get this kind of information. Is it true or not? From the data sources I've seen, this can involve all kinds of unique data sources that most mainstream most mainstream LMs will not touch. This could be insider reports. These could be like getting access to reports on insider interviews with quant analysts and the like. So I'm going to pause this, come back to it, and see what we can see. So what you're looking at now are the shadow market dynamics. This is for data uh, that's real. Um, so you can see here, this is minute data, I believe. And you have the order toxicity heat map, latency arbitrage opportunities you can see here. So the way to run these are probably, again, I'm just guessing here, but these are on the particular days that you could have run these particular strategies um, based upon the data I fed it. All these different minute exact time. So you'd have to have these um, FPGA boards running 24/7, literally. And all they're doing is just filtering the data as it comes in and says, these are the opportunities here. So here, if you're doing gamma exposure, you can do the same things, more opportunity here. To quote stuffing detection. So basically what this strategy involves is that you actually have, again, this is coded up by AI based upon what I've sent it. And again, that report is pretty detailed. You can get that. And I've shown that in one of those two videos I hinted at the beginning, where it will go over that particular strategy in pretty good detail and the logic of it. So what this particular report will take, or this particular AI will go out and generate as close as it can to that data. Then I'll use proxies and all kinds of stuff. So it's not going to be accurate, but just wanted to show you that there is quote stuffing going on here. Okay. And again, then we have dark pool stuff. And, you know, it's just pretty crazy right here. Um, and the dark pool is interesting as well because a lot of the firms will use obviously dark pool depending upon market conditions. And again, these so-called algorithms could see it, if we had the data that's proprietary. So if you are using a platform, one of the open source ones that does this, there are data providers that will provide this for you. You have to pay. You can get that at retail level, and I'm sure that that same data can be seen from the CME or other data sources. Very expensive, be a couple of grand per month, $500 from the CME. I don't know, but you'd be able to get this type of data as well to see dark pool. The Vanna charm, I'll kind of go over what that is. Um, I think it predicted alpha, so they're trying to generate alpha out of these. Um, and then the microstructure as well can be looked at as well. So here you can see toxic flow, again, metric, 78% of the time. Latent arbitrage chart, latency arbitrage opportunities were 8,000, nearly 9,000. Total exposure opportunities were close to the 1,800. Okay, so here's your uh, order book and balance distribution as well. Um, High intensity events. And again, this is working off of real world market data. So again, these are the very high level descriptions on what these are, these strategies, these metrics. Again, these are never been seen before unless you're on in the inside. And again, you always have to take these assumptions. Very important. You have to understand that these are complex strategies. Uh, they're always running on nanosecond level. Um, you are assumed again to being co-located in the exchange of the CME. You have full market depth data, and I've said that there's some data feeds that give you up to 200 levels. Cross asset data feeds, and along with that, probably you most likely will have a FPGA solution, not a software solution. So coming back to those things of what's a Vanna charm exploit, trade second orders after Greeks effects, order flow toxicity, fades toxic flow using VPIN like metrics. We've talked about these two, quote stuffing, gamma scalping, and latency arbitrage. I think that's legal. Exploit speed advantages to snipe stale quotes. That's usually, from what I've been talking about in the various videos, those are your pension fund managers and those are your retail trader flow. And that's part of the problem because these are people trying to make money off of their trading, also including pension funds as well. So these firms are taking advantage of their slow orders. Uh, I could go on, but so we talk about spoofing detection, fake liquidity, and then they cancel the order. We know that's questionable. It could be in fact illegal. As I said, there's new regulation coming. I don't know what it will address. Layering. The AI said is legal, but then I read in a real world article said that that's still legal. You're putting multiple orders at different price levels to create a false depth. Phantom orders that we've talked about as well. Orders placed and canceled within microseconds because it's trying to pump out fake liquidity and fake depth in the market. Microstructure noise trading and cross venue arbitrage. That happens a lot across multiple crypto exchanges like Binance, Coinbase, Kraken, and obviously if they're not allowing trading or Westerners to get access to Binance, that puts you at a disadvantage. So there's all that. So that's what we're looking at. So as I said, if you are interested in any of this fun stuff, what you can do is you can join my email list at quantlabsnet.com. You can also go into the Learn tab to check it out and do the same thing. This is fairly recent. If you want to try out my quant analytics for free for 7 days, I'd encourage you to try that as well. That'll give you a feel of what I'm pumping out, but it's kind of designed more for retail traders. I'm not sure what's going to happen at the end of November. Um, Examples, do I need trading view anymore when I'm going to be building out my own solutions for futures and options trading, and then report on that. So, and that's again real data, and that's valuable to a lot of people. So maybe I put all of the data and reports in that quant analytics as well. The other thing is, as I mentioned at the beginning of the video, Rhythmic. From what I understand, I gotta check. I gotta verify this with their support. But I'm trying to figure out. There are some exchanges or brokers that will give access to crypto, Bitcoin, Ethereum, and I can check the volume on most active futures. I'll show you that in a minute. That's according to BarChart. But giving you access as my setup, access with the API from Rhythmic, giving you access to the crypto, Bitcoin, Ethereum. As far as I know, I'm definitely not seeing it. I've run it for a week and I can't get access to Ethereum and Bitcoin at all. Everything else works. There's also the thing is from with Edge Clear, there was an option when I signed up for crypto for Coinbase derivatives or Coinbase institutional. That seemed to be free. So I might go through that route. I have to explore that. Or do I actually am entitled to get the Rhythmic crypto data? So I'm not sure with that. Again, I have to verify it with support. Right now, I just want to focus on getting the trading working, getting the plumbing working. We've got the data now working. I'm going to build a now scanner with everything that I've been able to get and download. And that's why I'm questioning, do I really need trading view anymore? And then pump that same analysis into trading view as well. The other thing is what I want to show was how crypto has really built out. So if you do a bar chart, most active future, this is the search term you'd want to use. Uh, so let me show you that. So this is going to only work during working hours when the markets are open. Um, so we have here futures. Let's see here. I think I have to log in. Okay. Yeah. Okay. I'm going to go through another browser here. So, so again, the search would be most bar chart, most active futures. Okay. And what you'll see here is the table that will give you the full list. Only works during the like futures can be traded overnight, but you won't get the same data. The important the important thing here is to see the volume. Okay, these are the most right now in the markets today, November 4th, 12:43 Eastern Standard. These are the most traded by volume, uh, most traded instruments right now are contracts. So you can see here the top will be usually your indices, your U.S. market indices. Then you get your treasury, and then you'll get makes sense with gold. But here's where the crypto starts to show up. You have Ether or Ethereum. No, it's really Ether. Then you have the bond, natural gas, Ultra T bond, and then you start to see some other ones as well. So if I go see more, um, no, okay. So my point here was I wanted to show you comparatively where Ether is standing or crypto on its own is standing up in terms of volume compared to everything else. What really blows my mind is Bitcoin can show up. Also, Ethereum right now is being traded more for whatever reason. I guess it's got better performance. From what I understand with the HFT shops, what they like about Ether is just more data to work with as well. It's just better to trade in. The other ones that showed up were Solana and XRP, I started seeing them as well. I guess it really depends upon the market condition, but that was yesterday, so I thought it'd be today as well. But the markets are in decline today, so I just wanted to highlight that yes, crypto is pretty well traded. Again, depending on the market day, but I have seen both Solana and XRP get in there in this particular list as well. So it is a traded um, uh, contract symbol instrument, whatever you want to call it, uh, as well, and it's quite highly volatile. But you can see here by volume. If you want liquidity, it's really important. I've said this before when I showed the file size. You see what's really traded as Nasdaq, S&P, Treasury. Uh, these are different durations of the Treasury, and then you get into gold, and then Ethereum, and so on and so forth. In my case, what I'm looking at is to prioritize based upon how much does it cost me to trade some of these contracts with a more complicated trade, with a synthetic option, with a future, all combined in one strategy. And if the margin requirement, and again, I'm only focused on the micro, okay, not the mini, not the full contract, only the micro. So that's what I'm interested. So if you come in here looking for Ethereum again, you can see it's Ether Micro. Okay, so there are a lot of micro traders in there, and this is one of the places they trade is Ether Micro, not the full contract. So depends upon the margin requirement and the size and the performance on whatever I see, and attempt to trade in real world with real money. Once I'm satisfied with that and I know that this process is working, then I'll roll it out to other contracts. Um, and Also, what I plan to do is then bump up the account size to 5,000 US, and still hopefully continue with a consistent profitability on higher win rates. So that's the plan. So I've kind of done the analysis. I'm kind of comfortable with the data. And when I said this before, this is like the third time I'm showing this is so critical. When it comes to the data that's downloaded from Rhythmic or via Rhythmic, you can see again all the sizes is built around the markets of gold. We have here oil. That would be 6S as a currency, so that's probably I can't remember S. Uh, Japanese yen, euro, Canadian dollar, British, Australian. So these are traded quite frequently. Um, and then we get into somewhere in here, we'll see the micro, ES, micro GC, micro Dow Jones, and these are the micros. So that's kind of more my world. They're high. They're more traded based upon data. Now, for whatever reason, this batch for the ES didn't get downloaded. I'm not going to worry about that. But just as a comparison to everything else. So here we have again Dow Jones, UB. Yeah, I don't know what B. TN's the 10-year Treasury. There's a silver right here. So we have silver contracts and then the micros as well. So just looking at the file size, you can see generally what's worthy to trade in because there's a volume. But then you get these other ones like QM, QI, like that's hardly traded. So you're not going to make a real go of those instruments because they're not traded. So you have to stick with the higher volume one. Anyways, that's what I'm seeing in the data. I'm not saying I'm an expert, but based upon what I'm seeing, I'm comfortable to say these things because this is real world data we're looking at now. And I have now the AI to generate what strategy may work and what may not work based upon what I'm building. So I got the only way to really know that is to put live money on it and see how it goes. And again, focusing more on the micro, and I've just shown you a couple of micros here that are available to download. With the, as I said, with the exception of uh, crypto like Ethereum or Bitcoin as it stands right now. But we'll leave it at that. Thanks for watching. You know what to do if you're interested. Also, we also have our I just announced our Black Friday sale. If anyone's interested, 75% off till the end. Well, really, Cyber Monday, December 1st, I believe it is, right here. So this is it right here. You can go on my blog and find that, or I'll put in my emails as well. Thanks for watching. Have a good day.